Welcome to the NFO review series. In this video, I'm going to be reviewing the Parag Parikh Conservative Hybrid Fund. Now, this fund has drummed up a lot of interest because it's from the Parag Parikh AMC. Their flagship fund, the Parag Parikh FlexiCap Fund, has had fantabulous performance over the last couple of years, and there's been a lot of buzz about this fund. So firstly, what does this fund do? Well, it invests in a combination of debt, which is basically bonds, equities, and it also has ability to take exposure to REITs and InvIT. So the fund can have 75 to 90% in debt securities, 10 to 25% into equities, and 0 to 10% in REITs and InvIT. Debt being the major component of this particular fund, let's see how the debt portfolio is going to be structured. Well, the portfolio is going to basically have a combination of accrual and duration instruments, which means that it's going to be a combination of corporate bond, government bonds, limited exposure to high-risk corporate bonds, and the idea is going to be to provide reasonable returns at low volatility. As far as the equity allocation is concerned, there's going to be a preference to buy stocks which have got high cash flows, focusing on stocks which have a good margin of safety. And of course, Parag Parikh is very well known for its stock picking ability. So I'm sure that they would make some good equity bets as well. The REIT and the InvIT portion has been basically added to provide some regular income and at the same time to provide some amount of capital appreciation as well. So should you invest? First off, when we look at the costs are pretty low. It's going to be 0.6% in the regular plan. So the cost is not an issue, unlike most conservative hybrid funds where the costs are certainly higher than 0.6. But I think the question really remains, where do you place a conservative hybrid fund in your portfolio? Due to the equity component in the portfolio, there could be periods where returns can be negative, and this is certainly going to impact income distribution. So certainly, I do not think that conservative hybrid funds can be invested into from a regular income perspective. Yes, from a capital appreciation perspective, you may want to look at it. Again, I find it's always better to do investments in debt and equity separately rather than taking these bundled products. And these products mainly work for people who really cannot figure out which fund to buy. They're okay with having a slight amount of equity exposure added on to their debt exposure. So maybe I will say that this fund may be suitable to senior citizens who are not looking at this from regular income, but really just want to invest for the long term, have a little bit of equity exposure, and really don't want to look around and try to choose other funds in their portfolio. So my take, as such, I am not in favor of conservative hybrid funds. I don't find them value enough to be used for any financial goal. But as I said, if you want to take a debt exposure, want to have the equity kicker in it, then maybe you could certainly consider the Parag Parikh fund. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.